I look at what's happening around us, what's new, what's innovative, where do we get good customer services. I also look at who's good to their staff, who's paying good wages, who's got good management, who's dealing with customer complaints, because these are the things that are going to build the companies of the future.
So hi everyone, we are back once again with one of your favorites from the past shows. We have eToro elite popular investor Sharon Connolly joining us in the show. Sharon, it's been a while. How are you?
I am great. I don't think I was an elite investor last time, so it's very good to be back. And a lot of things are the same. I'm the same, but a lot of things have changed. So I'm really looking forward to sharing those with you.
Yeah, that's why I actually stress the word elite, because that's where you are right now. So I want to start. I want to start with this. When we were talking at the early part of the year, the market was generally higher already, and then you said, if I remember it properly, okay, market's higher, but I'm still gonna invest because my timeline is very long. And right now,
Yeah.
we are up, still massively. My question is this first: what's your take on the market with all of the things that's going on, and we're relatively higher? Do you think the party will continue, or is it time for everyone to pack up because it's midnight and it's about to end?
Well, it's a very interesting question, and if either myself or anybody else had the definite answer to that, then they would be very rich and they would have a lot of people following them. But we know that governments have been injecting funds into the economy all over the world. So we know that that's been happening. We know that that also has to stop. I mean, if you think about it, the global economy has really done an amazing job at keeping us alive, because I know this is not the same in all countries, but certainly, and I know that this is not strictly so for all people, but generally speaking, all of our governments have done what they needed to do to get many people emergency support and do their best to keep people in jobs. But it can't go on. You know, we've got the tapering in the US just starting. We've got a lot of easing and pulling back on the bonds that they're buying. So we've got inflation at an all-time high in a lot of countries, and we've got interest rates at very low. So things are possibly going to change, and lots of stuff that I read talks about, what happened in 2008 or what happens in 2013. The thing is we've got hindsight, so we're able to see what happened in 2008, and we're able to see what happened in 2013, and we're able to do things differently. So for example, the tapering, and for anybody who doesn't know what tapering means, it just means that the US government is taking their foot off of the pedal with borrowing from the central banks. So in 2013 they completely stopped. It was a massive shock, whereas this time they're telling us we're going to do this. So we're able to try to prevent some of the crashes happening, but governments need to reduce inflation. Interest rates may need to rise. If interest rates rise, then more people will flee from the markets and go into the safe havens of bonds. So the market might not be quite so buoyant, and it could dip, but that's going to have more impact on your day traders than it will have on somebody like myself, because I do not need that money tomorrow. I do not need that money in January. I'm looking for what's that going to be worth in 5 years' time. And also, when I need it in 5 years' time, I don't need to take all of it in 5 years' time. I am planning for an early, comfortable retirement, whenever that happens, you know.
Looking at how things are going, I think you can stop anytime right now, Sharon. That's how massively good Sharon is.
Well, thank you. But I will say, and you can go and have a look at the stats, and I do outperform the S&P 500 by quite a bit, but the S&P 500 is going pretty well. So even somebody who was really had no idea what they were doing, and if they were risk averse, if they just, got themselves a really good ETF, they're going to be doing okay. They're going to be doing okay. But these are long-term things. So people need to be prepared to wait in case there's a dip, which September was a bit rubbish, wasn't it? I think a lot of people got really, including myself, I thought, here we go, September, here we go. And I don't mind for myself, but I really worry for the copiers, because so many of the people copying, not just myself, but all of the people in eToro, a lot of the time the copiers are brand new to the market. They don't know what they're doing. Maybe they are maybe they're thinking a little bit too much about their risk. They're not thinking enough about their risk appetite. They think that this is just win-win-win. They don't realize that there's market volatility. They put everything in and then they get really spooked when it goes down. And of course, somebody who's been investing for a while, volatility is part of it. But you don't know that. If you just started copying me on Monday and then everything lost 3%, you're like, oh my God, this is a scam. They're running off with all of my money. So they don't understand that this is normal.
And that's highly important, because people think that if they're not trading on their own, they just copy someone else, that it will be a smooth sailing, right? But it doesn't go that way. That's why, in my opinion, in anything, even if you're picking your own stocks, getting into a fund, or copying someone, it's still a high conviction game, and you need to tolerate all of the volatility that's going on. You said something interesting. I like how you painted everything. But what's interesting about that is, in all of those scenarios, you said it perfectly, that no one has a crystal ball on how it will play out. But my question is this: so what will be your strategy if the market continues to go up, and what would be your strategy if a large dip would actually happen as well? So optimistic and pessimistic approach, what would it be for you?
Not that different. There's a slight difference, but generally not that different. So for anybody who doesn't know what I do, is I tend to buy what I know. I tend to buy so work in a corporate job. So things like Microsoft, things like Atlassian, which is Team, Amazon Web Services. I work in the financial sector, but I don't work in finance. I work in more of a communications role, and I see what's making companies work. What are making companies work? You might even throw Salesforce, CRM into that, and then I look at what we're using in our home life. So whether that's your Netflix, whether you're going shopping in Costco, what it is, how you're paying for things on PayPal, when you got your coffee yesterday, did you tap on Square? I look at what's happening around us, what's new, what's innovative, where do we get good customer services? I also look at who's good to their staff, who's paying good wages, who's got good management, who's dealing with customer complaints, because these are the things that are going to build the companies of the future. So I continue to look at that, and I do have a review. I'm quite often criticized for, well, you've got the same stuff that you had in your portfolio 8 years ago. Some of it, yeah. Because do you know what? Apple is still producing really good stuff. Microsoft is still producing really good software. Facebook, although the cool kids will tell you that, Facebook is so yesterday, it's only for old people like me. But Facebook does new stuff. Facebook owns Instagram, and we've just changed to the metaverse and all of that. And the same with Google. People go, you've had Google for ages. Well, Google owns DeepMind, artificial intelligence. Google owns YouTube. So as long as an organization continues to provide great service, as long as they continue to attract great talent and innovate, then I'm going to carry on investing with them. I mean, I've ditched some as well. I've ditched a few that have, and that hurts me. It hurts me to say goodbye to them. I now know from doing my studying that there's an actual term for that. It's called anchoring, where you don't like to get rid of something that has a special place in your heart, like Beyond Meat. I really wanted it to do well, but it's just not doing much. But going back to your original question, I will continue to do the same. I will continue to invest in those companies that I see ticking those boxes for me. I will add more. Cybersecurity is fairly new for me. I think that's a massive issue that organizations have. So I've recently added Cloudflare and CrowdStrike, had a look at a few of the others as well. If there is a dip, I do take the opportunity and I dig into cash reserves that I've got, and then I'll stick more in the cash reserves. But generally, I won't change anything.
I wanna ask this based on some of the stocks that you mentioned. You mentioned Apple, you mentioned Google, you mentioned Microsoft. When you talk about those stocks, they're generally large cap already, and the biggest stake of people there is those companies made their run already. That if I'm a person coming in right now, 2021. Would I still have an upside given that they're so big already that for me to actually get X amount of return, it will take a large sum of money for that to actually happen? What's your take on that perspective?
Yeah, that's a really great question. And in some ways you're right. But so I don't know, without checking, I'm not sure what my return is on Microsoft or Apple, but it's actually pretty good. I don't know. I think it's about 40-50%. It's still good, but you have to balance out your portfolio, because if I just stack everything up with high risk stuff, then it's going to whack my risk score up. And also for your copiers, they need to see this stable, steady growth. So when you add something like Tesla, you're going to get a very volatile ride. You're going to get some amazing, whoa, look, it's gone up by 12%. Oh, hang on a minute. You're not going to get that with your Microsoft and your Apple unless there's an earnings release, or maybe if there's a new piece of technology out. But I'll go back to my previous point. If we think about Microsoft perhaps having had its day, if you were involved, if people out there were as much involved in Microsoft as I am in my day-to-day work, you look at how, when the pandemic started, Teams was a bit shit. Okay, and then everybody, we were sort of struggling to do stuff, and people were like, oh, I need Zoom, and everybody needed Zoom. I was quite hesitant about Zoom because I'm thinking, I don't really know whether the business model is going to be sustainable for Zoom, because what happened is exactly what has happened. Microsoft has massively stepped up with Teams. What we've got new with Microsoft, we've got a really robust subscription model. So they've changed everything for both their consumer and their private clients, that instead of you buying Microsoft Office once, you buy a Microsoft Office 365 subscription. And because of the involvement that I've got with them, I know how much they listen, I know how much they're doing, I know how much they're adding. And you just have to do something like following them on LinkedIn. If you follow them on LinkedIn and you have a look at what new innovations come out, they are rapidly changing all the time. So the Microsoft that you are dealing with now is not the Microsoft that you were dealing with 10 years ago. They continue to change. When they are no longer changing, then I will say goodbye. And people say you've got a lot of tech stocks, Sharon. Yeah, Atlassian, another thing. So if you work in an IT related area, and if you don't, this would be really, really foreign to you. But what happens is it makes it sound like a bit of a cult, but if you work in an IT related area in an organization, everybody stands up around a whiteboard. Well, they used to. Now it's probably online, and they move all these post-it notes around, and you have this whole methodology called Agile, and whole companies run on it, and that is based on Atlassian. So Atlassian's Jira and Confluence. And again, the way that they do business is really unique. It's a really different way. They never advertise. They give away their software for free until they hook you in, and then once everybody's hooked in, then they become reliant on it. So here's another group, and Atlassian was founded by two Aussie guys, and they have a really interesting way of doing business. And they might be an IT company that's been around for a little while, but they're different and they continue to innovate. I've given you a chance. Beyond me, I have given you a chance. I've sat there and I'm waiting, and I'm thinking that something is going to happen. But will my money go up faster somewhere else than it's going to recover in Beyond Meat. And that's the thing, it's the opportunity cost. What could that money be doing somewhere else? So I'm backing this horse in a race.